Welcome to Mutilayan News Channel. We present overview of current global liquidity as of 2025. This detailed analysis of global liquidity provides valuable insights for Mutilayan Investments to inform its investment strategies and operational decisions. By staying attuned to global liquidity trends, the company can position itself for sustainable growth and resilience in an evolving financial environment. Global liquidity refers to the availability of liquid assets, cash, government bonds, and other easily tradable securities in the global financial system. It is a critical factor influencing economic growth, financial stability, and investment opportunities. Below is a detailed analysis of the current state of global liquidity, including key drivers, trends, and implications. Definition of global liquidity encompasses central bank liquidity, funds provided by central banks through monetary policy tools such as quantitative easing QE and interest rate adjustments. Market liquidity, the ease with which financial assets can be bought or sold without significantly affecting their prices. Private sector liquidity, funds held by banks, corporations, and investors that can be deployed for investment or lending. Key drivers of global liquidity, central bank policy as quantitative easing QE. Many central banks, including the Federal Reserve Fed, European Central Bank ECB, and Bank of Japan BOJ, have implemented QE programs to inject liquidity into the financial system. Interest rates. Central banks have maintained historically low or negative interest rates to stimulate borrowing and investment. Forward guidance. Central banks provide guidance on future policy actions, influencing market expectations and liquidity conditions. Fiscal stimulus. Government spending. Increased government spending in response to economic challenges e.g. COVID-19. Climate change has boosted liquidity. Tax policies. Tax cuts and incentives have increased disposable income and corporate cash reserves. Private sector behavior. Corporate cash reserves. Corporations have accumulated significant cash reserves, which can be deployed for investment or returned to shareholders. Bank lending. Banks play a crucial role in distributing liquidity through loans and credit facilities. Current state of global liquidity 2025 Central Bank liquidity. Federal Reserve. The Fed has maintained a balanced approach, gradually reducing its balance sheet while keeping interest rates steady to support economic growth. European Central Bank. The ECB continues its accommodative stance, with targeted longer-term refinancing operations TLTROs and asset purchases. Bank of Japan. The BOJ remains committed to its yield curve control policy, ensuring ample liquidity in the Japanese financial system. Emerging markets. Central banks in emerging markets are consciously tightening monetary policy to combat inflation while maintaining liquidity.
Market liquidity. Equity markets. Equity markets remain highly liquid, supported by robust investor demand and technological advancements in trading platforms. Bond markets. Government bond markets are generally liquid, but corporate bond markets face occasional liquidity challenges, particularly for low-rated issuers. Foreign exchange markets. The forex market remains the most liquid market globally, with daily trading volumes exceeding $6 trillion. Private sector liquidity. Corporate cash reserves. Global corporations are holding record levels of cash, providing a buffer against economic uncertainties and funding opportunities for growth. Bank lending. Banks are extending credit cautiously, with a focus on creditworthy borrowers and sectors with strong growth prospects. Trends shaping global liquidity. Digital transformation. Innovations. Fintech companies are enhancing market liquidity through innovative trading platforms and payment systems. Cryptocurrencies. The rise of digital assets is creating new sources of liquidity, although regulatory uncertainties remain. ESG investing. Green bonds. The growing demand for green bonds is increasing liquidity in sustainable finance markets. ESG integration. Investors are prioritizing ESG factors, influencing liquidity flows into sustainable assets. Geopolitical factors. Trade tensions. Ongoing trade tensions and geopolitical risks can impact global liquidity by affecting investor confidence and capital flows. Sanctions and regulations. Sanctions and regulatory changes can restrict liquidity in certain markets or sectors. Implications of global liquidity. Economic growth. Support for growth. Ample liquidity supports economic growth by facilitating investment, consumption, and trade. Inflation risks. Excessive liquidity can lead to inflationary pressures, prompting central banks to tighten monetary policy. Financial stability. Market stability. Adequate liquidity contributes to financial stability by reducing the risk of market disruptions. Asset bubbles. Excessive liquidity can fuel asset price bubbles, particularly in real estate and equity markets. Investment opportunities. Yield search. Investors are searching for yield in a low-interest rate environment, driving demand for alternative assets, such as private equity and real estate. Emerging markets. Emerging markets offer attractive investment opportunities, but liquidity risks remain a concern.
Regional analysis of global liquidity. North America. United States. The U.S. financial system remains highly liquid, supported by the Fed's accommodative policies and strong investor demand. Canada's liquidity conditions are stable, with a focus on supporting economic recovery and addressing housing market risks. Europe, Eurozone. The ECB's accommodative policies ensure ample liquidity, but challenges remain in peripheral economies. United Kingdom. The UK maintains robust liquidity, with the Bank of England balancing inflation control and economic support. Asia-Pacific. China. China's liquidity conditions are influenced by government policies aimed at stabilizing growth and managing debt risks. Japan's liquidity remains ample, with the BOJ's yield curve control policy ensuring low borrowing costs. India's liquidity is supported by the Reserve Bank of India's RBI accommodative stance, but challenges remain in the banking sector. Emerging markets. Latin America. Liquidity conditions vary across the region, with some countries facing inflationary pressures and currency volatility. Middle East and Africa. Liquidity is supported by high commodity prices, but geopolitical risks and structural challenges persist. Future outlook for global liquidity. Central bank policies. Normalization. Central banks are expected to gradually normalize monetary policy, reducing liquidity injections and raising interest rates. Inflation control. Inflation control will remain a priority, influencing central bank actions and liquidity conditions. Technological advancements. Blockchain. Blockchain technology is expected to enhance liquidity by improving transaction efficiency and transparency. AI and big data. AI and big data will play a growing role in liquidity management and risk assessment. As integration, sustainable finance. The growth of sustainable finance will continue to shape liquidity flows, with increasing demand for green and social bonds. Regulatory support. Regulatory support for ESG initiatives will enhance liquidity in sustainable assets. Conclusion. Global liquidity remains ample in 2025, supported by accommodative central bank policies, fiscal stimulus, and private sector cash reserves. However, challenges such as inflationary pressures, geopolitical risks, and regulatory changes require careful monitoring. For multi-billion investments, understanding global liquidity trends is crucial for identifying investment opportunities, managing risks, and delivering value to clients. By leveraging technology, prioritizing ESG, and adopting a proactive approach to liquidity management, multi-billion investments can navigate the dynamic global financial landscape and achieve long-term success. Prepared by GBOLA Aloco Research Institute. 4. Multi-billion investments.